YouTubers, Mike Martins here, Mike Martins channel, bringing you back a little bit of an archival video and how things are coming to fruition today. This was posted on 2016 of May 20th, 2016. 100% loan-to-value mortgages, buy a house with no deposit, what? Where was this? I'll tell you right now. On different other sources through YouTube. You know that in England, in the United Kingdom, that's what they named it as, they're actually going 100% loan-to-value on houses, basically zero down payment. So it's like 0% down. Just sign on document, sign on the dotted line, the house is yours. I can't believe that. Like, that's incredible. Because here, I think they raised it 10 or 15 or 20% down. And then 20% down on 100,000 isn't bad, but, I mean, the houses here start at 1.5 million. So, I mean, they got you there. You see that house right there? It's a teardown. That house right there. That sold, when I was living in that area, that sold for $2.4 million. And it's a 100% teardown. Let's see if we see the other house. Hold on. I'm going a bit off topic here. But I want to show you the one that sold for $3 million on the corner. Make like 40 or 50,000. That's not there. There's a house on the corner here. I wish I kind of got more footage of it. They actually told me to take down the video. Anyways, I've been talking about this forever. And ever and ever. And watch this. Interest-only housing crisis could lead to U.S. meltdown. And I've been talking about this for a long time ago. There's Australia there. Big trouble in Little Aussie. Interest-only loans. This one's 17 months old. So, yeah, I've been talking about this for a good long while. So, if you guys want to join a discussion group, join this one. r/Australia Finance on Reddit. 900,000 interest-only loans to reset this year in Australia compared to 81,000 in the UK. But a lot of them in the UK were 100% loan-to-value. And some people got 105% loan-to-value because they figured that property would just keep going up. Might as well just give them the extra money now so they could do renovations and stuff. That's a nightmare, people. That's a nightmare. So, let's take a look here. Property borrowers brace for $300 billion interest-only credit crunch. So, we got a bit of the article here, but we got the gist of it. Borrowers with interest-only mortgages worth about $300 billion are bracing for a credit crunch as their fixed terms are taken out at the height of the property boom begin to expire. About 900,000 loans, or about 1 in 6 mortgages based in the nation's 1.7 trillion mortgage loan book, will need to be extended with their... So, now what's happening is the watchdog of the banks basically is basically telling Australia that their banks on the books that 30% of their makeup of products, 30% now could be interest only. That is a disaster. That is a disaster. That's to help stimulate and not bring housing prices down so quick. Because right now, everything's down 10% right across the... Well, except Hobart and other parts in Australia. So here's the one from the UK. Thousands of homes at risk and interest-only mortgages set to mature. I'm going to save this for the image of the... I'm going to save that. I hope it saves. I'm going to save it so I can put it as the image of the video. That's a cool one. Look at that. Owners of interest-only mortgages are being warned they could be in financial strife as thousands of deals come to an end. So this is the UK now. Tens of thousands of homeowners could find themselves in financial distress as many interest-only mortgages are set to mature this coming year. A total of estimated 81,000 mortgages will run out of their interest-only period during 2019, totaling about $9.2 billion in value, according to the Financial Conduct Authority of FCA. A further 82,100 mortgages worth $9.7 billion will mature in 2020. House owners could be faced with repaying their loan in full, seeking another mortgage deal, which could result in much higher monthly payments. And not only that, mortgage fees, closing fees, blah, 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 Mickey Mouse, and you are a slave. House owners could be faced with repaying the loan in full or seeking another mortgage deal, which could result in much higher monthly payments. So they're going to have to go to a B lender, a C lender, because they don't qualify, and because they use stress testing in these countries, they're starting to feel that you don't qualify for this, and I don't think you have the potential to pay it back. Why did you lend it in the first place to them if you knew from the start they didn't have the potential? But you wanted your books to look good, didn't you, bank? The banks want the books to look good. What do? They take the customer for a ride. As many of these interest-only mortgages hold mortgage holders over the age of 60, options for borrowing can be relatively limited and could see them still paying their homes well into retirement. Banks have started sending letters to borrowers. They are concerned not everyone will have a plan in place for repaying their loan. Crunch time for interest-only. Interest-only mortgages were popular in the 1990s as they allowed people to buy a home with only relatively small monthly payments being made. Yeah, but in 1990s, the average place was like 170 grand, 100 grand for a 2-bedroom condo in the 1990s. It's not $2 million what it is today. Initially, these were intended to be paired with endowment policies, which would pay back the outstanding balance once the mortgage matured. However, it's kind of like a balloon mortgage, guys. That's what you call a balloon mortgage, where you just pay the interest only, and then when it matures in 5 or 8 years, depending on how long your arm is, your arm or your amortization, you could pay in full after. So you got to be careful and put money aside to pay off the balloon. You pay off the balloon, and then you're okay, right? But that's an old bank lending tool they used to have back in the day. However, endowments began to perform badly. Lenders continued selling interest-only mortgages despite the borrowers having no plan in place to pay it back. We reported in 2015 interest-only mortgages were creating a ticking time bomb with 3.3 million people holding these types of borrowing. Research by Citizens Advice shown that 1.7 million of these people have no repayment scheme linked to their mortgage, and that half of a million haven't even thought about how they will repay the money. Although interest-only lending was brought to a halt in 2012, the next few years crunch time for thousands of borrowers who will still be faced with repaying a huge amount of money or having their home repossessed. The first peak of 2019 and 2020 will affect mainly people approaching retirement age with higher income assets as well. More time to repay the capital. More worrying is the next tranche of maturity, which is set to occur in 2027 and 2028 and will affect older, less affluent people. So this is a huge problem, guys. And I hate those commercials at 2 in the morning. Are you over 65? Do you own your house? Well, we got a plan for you. We could give you money, a reverse mortgage, and you could play golf and travel and blah, 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 until you're, ripe age of blah, blah, blah. But you reach the ripe age of blah, blah, blah. I'm still alive. What do? I can't pay this back. I'm going to lose everything. And that's what's happening, people. What could borrowers do? That is the main question. Homeowners with interest-only mortgages should check their policy. The policy is due when it's due to mature. They should endeavor to have a plan in place well before its date so they know what they will do once the mortgage expires. Lenders have a right to repossess the property if the loan isn't repaid, so forming a plan of action will be crucial if borrowers wish to stay in their home. Extending the mortgage. Lenders can sometimes extend the interest-only deal, giving the homeowners more time to raise funds or grow value in their property. Switching to repayment mortgages, payment mortgage lenders will be willing to switch to a repayment type, but this caused monthly payments to increase significantly. Yes, because you're actually paying down the principal. But the problem with that is the total debt service ratio from the existing loan is just a fine slither of money for food. Now, if they raise it significantly, they have no money for food. They could go 3 days without eating. Overpay. Paying more than the interest will start to whittle down the capital, but not all mortgage agreements allow this. Take a retirement interest-only deal. Some lenders offer retirement interest-only deals, which will keep repayments similar until the homeowner dies or goes into care. Downsize. Properties with significant equity could be sold, releasing additional capital to move into smaller, cheaper home. People who feel they were missold their mortgage or did not have a situation adequately explained to them could try making a complaint to the lender. Yeah, that's the thing right there. A lot of people were forced or roped into these deals that basically getting them nowhere. Reviews by the FCA in 2015 showed that mortgage advice had room to improve and that not all recommendations made were appropriate to the situation. Complaining won't wipe the debt, but could see borrowers getting help to repay what they owe or being given more time to make arrangements to repay the capital. So this is the link here to the help where to get help for debt. Check this out, guys. I mean, they're just going to give you a story, but sometimes you need someone to talk to, and it's like that video I did, mortgage on my channel here. I did Australian helpline. I did for you guys. I think it was called Helpline or Australian. There it is. That was a year ago. Housing crisis, Australia help hotline out of control. So I got inside information from a gentleman that works at this help hotline. He told me the amount of calls they're getting in with people that can't afford to pay their bills. Let me know what you guys are thinking. Let me know what you guys are doing. Let me know if you're stuck in one of these interest-only balloon jumbo mortgages or Mickey Mouse low-interest teaser rates. Let me know. Comment below. I'd like to know. Thanks for watching, guys, and don't forget to hit the subscribe button.